Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the post-election rally. What happens now? We will ask the investment committee what they're buying and selling at record highs. Joining me for the hour, Joe Terranova, Shannon Sikocha, Jim Lebenthal. We're all at Post 9. Check the markets here. We do have a decent day for the Dow. S&P's trying to get something going, and the NASDAQ is on the flat line, too. CPI, Joe, in line. Many saying that keeps the rate cut for December in play. Because it wasn't, hotter than maybe some had feared it could be. You do have the major averages up a bunch since the election, and Barclays today says, yeah, there's strong fundamental footing, but the melt-up might be too fast. Is that the case, or no?
We're going to learn if the melt-up is too fast in January. Momentum is absolutely in control of this market. Momentum is the factor. Now, you could make the argument that the market is overvalued. You could make the argument that we are appreciating too quickly. But as we move towards the end of the year, what is clear is that price is dictating everything. I mean, just look across the entire landscape, the recovery that we're witnessing. We're all going to be on Bitcoin 100,000 watch. Congratulations to all of you that are invested. I missed that one. But going beyond that, the broadening out is happening. You're seeing the strength in financials. And you're seeing areas of the market that have not performed for years, Scott. The high beta names, the hyper growth names that are now finally working once again. And what are they being fueled by? They're being fueled by that pure factor of momentum.
Shan, too much too fast? Totally justified? And more to come? How do you think this plays out from here? All right, our question at the very top is should you continue to buy into this post-election rally? And many would suggest there are many reasons to continue to do that. What about you?
Well, I think it depends on where your positioning is. If you came into the election and over the course of the third quarter, you had started to pare back some of your equity allocations from the perspective that, elections always create uncertainty, and perhaps that you weren't going to get this typical post-election bump because, again, it was hardly a typical U.S. presidential election year, especially, Scott, since we had such strong gains in the first half of the year. So if you've pared some of your equity exposure back in the third quarter and you're coming into this scenario now, I wouldn't be surprised to see people adding. The other thing is that there's a lot of positioning happening here. If you think about what perhaps performed well in the first half of the year, then we had a little bit of reversal of some of those trends in the third quarter. September and October, people were trying to find that direction. And to Joe's point, it doesn't seem like you have to be all that discerning now. You really just want to make sure that you have exposure going into year end. You're looking at the names that you think perhaps from a valuation perspective look a little bit more attractive. But most importantly, I think we're understating or undervaluing the stronger economic data that we've been getting. And that really is going to support the broadening out. It's going to support earnings outside of those Mag 7 names. It's going to justify not just broadening out, Scott, but really this thrust into equity exposure is not just based on policy, but it's based on the economy and where we're going into 2025 from a footing perspective.
Farmer Jim, I mean, a lot has worked, obviously, since Election Day, but not everything. And by not everything, I don't mean things like staples or utilities. I mean things like Microsoft, for example, which is up, but only up 2% since the election. So that looks weak relative to some of the other gains that we've seen. I bring that up because you trimmed it. Which I thought was a pretty interesting move. Why'd you do that?
Well, it's just clearly not the leader right now. And I'll extend that to say that the Mag 7 in general is not the leader right now. You can look at Apple as another name in that space. But I also want to say that the Mag 7 should no longer be looked at as a monolith that moves together. There are different forces. There's different business models in there. But just to go back to Microsoft specifically, I think at this point in time, everything that we think we're going to know about AI has to be priced in. This is a good, year and a half, 2 years since ChatGPT really hit the ground running. I'm sorry, about a year, a little over a year. At low 30s multiple, I think it's all priced in. And I'm not selling the name entirely because I think as the market goes up, something like this, which is a huge part of the overall market, is going to benefit from passive flows. But there are other areas of the markets that are working really well right now. And Shannon, you alluded to the broadening of the market. Think about industrials. Think about financials. Think about things that haven't worked as well, but probably will. And I'll put healthcare in that category.
You said that they're not going to, be viewed as a monolith anymore. But you you spoke of them as the monolith when you say, well, AI is all priced in, because you could think that maybe it's priced in for Microsoft, but there are many suggestions that it's not priced in even to NVIDIA, which reports next week, right? So you can't have it both ways. If it's not going to trade like a monolith, then don't refer to everything as a monolith in terms of what's priced in and what's not, because there are, there are standouts, ones that are still suggested to be that, and then ones that where, in fact, maybe some of it is priced in.
Yeah, let me be clear. I don't think they're a monolith, both in terms of different businesses, okay, so that, for instance, Netflix is not the same business as Microsoft. But your point, I think, is excellently made.
Netflix is not one of the Mag 7s. No. Nor is it. Why'd you pick Netflix?
Okay. You want to pick Tesla? I mean,
well, no. I'd like to pick one of the
one that's working right now.
Let's talk apples and apples.
All right. You don't need a 2-on-1.
Let's talk apples and apples.
Okay. Let's talk apples and apples. I will grant you, I think NVIDIA is fairly priced here, and I'm not trimming NVIDIA. I will also tell you I'm not trimming Alphabet right here, another AI name, because I think at the valuation, it's absolutely underpriced, and I think that's a name you can add to here. So if you want to stay within the AI space, absolutely, there are names that I think are not going to move symbolically with each other. I think Microsoft, and we've already seen it, right? We've already seen, look at NVIDIA versus Microsoft. They're not trading the same, and they're not going to trade the same. Look at Oracle versus Microsoft.
I think Amazon through the end of the year is the one name.
I love Amazon.
Of the Mag 7 that will outperform.
It's a record high today, by the way, for Amazon.
I think you're seeing a rebuilding of positioning, and momentum again as a factor there is being applied very strongly.
Let me just tell you too, outside of these names, there are a bunch of tech ETFs that are hitting new record highs that we don't really mention ever. I have to tell you, we talk about a lot of the stocks within it, but not the specific ETFs that are at new record highs. The SKYY, that's the First Trust Cloud Computing ETF. 7 straight days up. It's up 13% in a month. It's a new record high today. That's Cloudflare, that's MongoDB, that's Confluent, that's Pure Storage. We're just having a conversation here about Microsoft and Oracle. We need to pay attention to names outside of the traditional ones that we always talk about.
Yes, we do.
Yeah, and I think this is, Scott, this is animal spirits. This is small and medium-sized business enthusiasm. This is capital expenditure in technology that's outside of it.
Hold your thought just for 2 seconds. I want to go to Emily Wilkins with breaking news on Capitol Hill. Emily?
Hey, Scott. Well, at this point, we do know who the next leader for the Senate will be. It is John Thune. He was just voted in by Republican senators to that role. He will then succeed Mitch McConnell. Now, of course, we knew going into this, Thune was kind of considered a front runner in this, but there was, of course, Rick Scott, someone who has a little more support from Trump world, who we saw Elon Musk tweet out as his particular choice. But we've now seen the senators respond. In the very first round, Rick Scott got the fewest number of votes, and then John Thune and John Cornyn went head-to-head, and Thune just emerged slightly victorious, that from 29 to 24 votes. And of course, I think this is going to set the Senate on a path where it will continue to be a check and a balance to the White House. Certainly a lot of senators, they're very motivated by Trump's resounding win. They do see that as a mandate. But by picking Thune, someone who has been in leadership before, who's considered perhaps a little more of a Main Street, mainline Republican, they have certainly set themselves on a direction where they're not just going to be taking everything that Trump says and doing it immediately. There is probably going to be a bit more of a check and balance here. But of course, we'll be watching the Senate very closely. They've got some big debates coming up, making sure they're avoiding a government shutdown next week, dealing with the fiscal cliff that will start at the beginning of January. And of course, we will be following all of that very closely. Scott?
We have any idea, Emily, and I don't think you said this, and if you did, forgive me, how close the vote was as the other names were in the mix as well?
Yes. So we started off with John Thune, John Cornyn, Rick Scott. On the first ballot, Rick Scott the fewest number of votes, and so he was dropped from the ballot. And then you can see here that second ballot between John Thune and John Cornyn. Thune got 29 votes, Cornyn got 24. We should also know that John Cornyn was also seen as a little bit of an establishment pick. He's not currently in leadership, but he was Senate whip, and he was actually Senate whip during Trump's first term, so that number 2 spot. So both of them were seen as a little bit more established. Both of them have butted heads with Trump in the past, but both of them now say that they have a very good relationship with Trump and the incoming president, and that they are willing to, of course, work with him on various things that Trump has wanted to see, including those recess appointments. Thune and Cornyn, they've expressed an openness to it. I think at this point, they just want to make sure that Trump is going to have an easy time getting his nominees confirmed. But it sounds like they also do want to make sure there is some check and balance with the Senate in overseeing those nominees.
Appreciate that, Emily. Thank you for the update. That's Emily Wilkins down on Capitol Hill for us. We'll continue to follow that developing story throughout the rest of the day, of course. But back to our conversation, Shan. Forgive me for interrupting you. The idea that there are a lot of other tech stocks that are outside of the Mag 7 universe that are hitting record highs. I just want to reiterate. It's the SKYY we're focusing on, the First Trust Cloud Computing. It's the Software and Services ETF, the XSW. It's the First Trust NASDAQ Cybersecurity, the CIBR. Just keep an eye on these. They're all hitting record highs today.
Well, as I was mentioning, I think this is about capital expenditure, Scott, outside of direct AI spending. This perception, we saw a lot of pressure on software earlier this year because the perception is that companies would have to take their tech budget and they would have to cannibalize spending on other types of software in order to promote their AI spending. And what you're seeing now is you're not only seeing that pie perhaps grow based on enthusiasm around continued growth next year, but you're seeing that small and medium-sized enterprise, they're getting some confidence here in terms of the environment for them in 2025. And so you're seeing this renewed enthusiasm that, again, that pie might be bigger, not just for larger companies, but also for some small and medium enterprises to be able to invest on the AI side while also in their kind of software budget.
Joe, I mean, you got like Palo Alto, you got Palantir, AppLovin.
Yes.
These are all, AppLovin's up 75% since the election.
Yes.
Which is in the T. Fortinet's up 28, DocuSign's up 15, but there are a lot that are filling out these ETFs that I mentioned that have been just outsized gains since election day.
Absolutely, they are, and it's. I wonder if it's coming at the expense of capital coming out of the semiconductors. You look at the semiconductors today, and you'll see KLA Corp down 3%, Lam Research down 3%, Monolithic Power down 5%, Micron 3%, on down 3%. So I think money is flowing out of the semis into the software names, and it's really not just large and mid-cap software. You could trade down into some of the hyper-growth names. If we could pull up a chart of a name we probably haven't talked about in several years. How about Zoom Video? Look at the positive momentum in Zoom Video. That stock has recovered from where it was in 50. It's trading 85.48 today. Other names like DocuSign working well. So some names that we were talking about several years ago in the software space, they're coming back once again. There's another name. It's a wish and a hope name. It's an emerging software name. Bill Holdings. Pulled up Bill Holdings, BILL, and you'll see the powerful force of momentum.
You bought Twilio,
I did.
Which is a new buy for you, an old name for you, but a new buy. I mean,
Yes.
You've been, I don't know, in and out of this name, I don't know,
So
two,
many
three,
times.
4 times.
So many.
I didn't even
I
remember.
think it's over the last 10 years.
Why now? Why now again? 52-week high today. It's up 22% month to date.
Yeah. So this stock, again, I'm going to acknowledge that more than anything else, price is dictating where people are investing right now towards the end of the year. And you could have a problem with that. That's fine. And that might be the wrong approach when we turn the calendar to 25. But that's what's going on so far here year to date. So Twilio reports they really didn't need very much. All they had to do was exceed low expectations. You're talking about a company that was growing 4-5% over the last several quarters. And that company 18 months ago, 24 months ago, was growing 20+%. Revenue growth comes out close to 10%. Got people excited once again. Analyst community comes in. They upgrade the stock, raise the price targets. I initially bought some 95 calls in the name that expire at the end of December. Sold those out at a profit earlier this morning. Rolled it into the equity. Now I'm long the equity, and I'll stay with that name.
Jimmy, Adobe, Oracle. So we already went through the big ones, Alphabet and Microsoft that you have, but just wrap this this tech conversation up for us before I move on to the other areas that have done quite well since the election?
I think any sector that we look at, you can find winners and losers. And sometimes it's an obvious winner like Oracle, which has gone through the roof for quite some time. I think Adobe is quite interesting here. It's had a rough 12 months, no question about it. A lot of that has to do with the last earnings report, which gave a lot of question as to the fourth quarter. I think a lot of that fourth quarter was brought into the third quarter and will also be filling out the first quarter of 25. My point on this is sometimes you want to look at a laggard like Adobe and say that's where I want to go. And if you look at Adobe over the last month, it's had a very strong bid. I think that is just beginning.
So the leaders since the election, discretionary is actually number one, which I don't think is going to surprise anybody when you factor in the weighting of a Tesla and an Amazon, especially Tesla, which has just gone absolutely parabolic since the election. Financials, though, number two. And Jim, you referenced this earlier on this idea of continuing to buy in to this post-election rally or take a bit of a break. There's obviously a lot of optimism around fewer regulations. Discover's up 17% since the election. Synchrony's up huge. Goldman's up big, as is Morgan Stanley. Capital One, these are all up low to mid double-digit percentage points since election day. Do I continue to buy these stocks?
Yes. Now, I think I know you well enough, Scott, that I detected a tone of trees don't grow to the sky.
No, you did not.
Okay,
Actually, on this occasion, you did not.
Then it's my inner dialogue that is saying, and it's appropriate to say, trees don't grow to the sky. However, looking at my friend Joe here, who is a known momentum identifier, and I think we can say that this space, the financials, has a lot of momentum. When you combine that with the fundamentals, which are extraordinarily strong right now, whether it's valuation, whether it's deal flow that's likely to pick up, whether it's credit quality, which is probably the most important thing. When you think, let me finish, I see you. When you think about some things that have held
I was going to give you something that I was going to try to speak your language a little bit. I was going to say, well, the trees, what if the trees have been pruned too much over the last 4 years, and now they have a chance to grow again? So it's not like they're growing from a very high base to the sky. If they were pruned back and perhaps a little too much, now they have a chance at this regrowth. I'm just trying to put things in terms that, you would sort of identify with for obvious reasons, Barbara Jim.
I love it. I love it.
Now they're just going to get watered with plenty of water.
And there's a lot more growth to come because these valuations, look, JP Morgan is the creme de la creme. We're never going to talk about it being undervalued. It's not. But it's the leader in the space. Of course it's going to perform. When you look at a lot of other names, like a Citigroup, of course, which I love, or a Bank of America or Wells, and you look at these valuations particularly, and I am baiting you with this, Scott, you look at Citi's price to book value and you say there is reason for it to accrete to par on book value.
Jane Fraser was giving an interview in which she said it was, quote, game on. She, of course, the Citi CEO, since you mentioned that. She talked about a lot of pent-up demand, as others are talking about as well. So Deutsche Bank today raises their price targets all across their coverage, talking about how much these things can grow. Your Citigroup is $70 from 65. Goldman's 575 from 500, JPM 240 from 235, Morgan Stanley 125 from 105, Bank of America to 50 from 45. What do you think, Joe?
I think, understanding that the corporate tax rate is going to be anchored at 21 really helps the sector tremendously. And it helps more than anything else when we talk about animal spirits. We're not talking about animal spirits within the equity market itself, but the animal spirits.
Yeah, we kind of are. I mean,
right,
that's
because we've had
kinda.
that. But what I mean is, looking forward now, you have the potential in the C-suite to see some animal spirits as it relates to corporate activity. So, look, Jimmy, you mentioned momentum. The JOTI ETF has had a significant overweight to financials for the better part of this year. And one of the reasons why was because we were seeing that the inversion was coming out of the market. By the way, we're only down to a 3-month versus a 10-year as it relates to inversion, and we're inside 10 basis points right now. So we're going to ultimately see the entire curve has lost the inversion. That's beneficial. Now you get this catalyst that comes from a Republican majority that's going to introduce a less stringent regulatory environment, going to anchor the corporate tax rate. And the argument that the financial sector is overvalued, I'm not so sure that applies the same as it can apply in other areas of the market.
Shannon, Mike Mayo the well-known analyst at Wells Fargo Securities calls this a watershed inflection moment, a transition from 15 years of harsher regulation to more emphasis on economics, greater than politics, and more predictable oversight. There's going to be less regulation risk, and he favors Citi, Bank of America, and JPM. Is it, in fact, a watershed inflection moment for these stocks, despite the fact that they've gone up a lot?
I think that the compounding of the regulation that we've seen over the years has significantly detracted from confidence for smaller and medium-sized businesses in particular. And it's important because Joe made an interesting point. This isn't about, similar to the first term for Trump, where we saw the lowering of the corporate tax rate. That's really a one-time benefit. What the banks are actually going to benefit from, again, less regulation for banks themselves, Scott, in terms of Basel III Endgame, which may just be thrown out the window entirely. But again, there's a ripple effect here in terms of regulation that actually is much more accretive for the M&A activity and the loan growth for these banks that I think has a much longer tail than just cutting the corporate tax rate did in Trump's first term.
There's some talking about, obviously winners in capital markets. Barclays has an interesting note, Joe, today. You're looking at the private equity players like Apollo, which you own, KKR, the retail brokers, Interactive, which you own, the Coinbases of the world. They call the clearest winners. You own all three of those.
Coinbase has been remarkable. It's staggering. But listen, it's correlated to Bitcoin. So I said before I missed the Bitcoin move, we do have coin in the ETF. Interactive Brokers is just benefited over the last several years from a very favorable trading environment, and management has really stewarded that entity very well as it relates to the balance sheet. I think trading is going to be something that we're going to be talking about in January for a lot of the investment banks. What did the trading revenue look like in this quarter? And I think for all of us collectively, you would have to assume it's going to be a very strong trading revenue quarter for the fourth quarter.
Another interesting move from you in context of the overall market and what hasn't worked, and that being healthcare. So you sold Amgen and you bought the XBI. Now, healthcare has not worked. Some think that biotech's oversold, like Jeff DeGraff at Renaissance Mac. He says our option frenzy work suggests people are aggressively playing for the downside. He's talking about biotech specifically, calls that bullish tactically, but in the face of deteriorating relative trends, buying oversold downtrends is a dangerous game. If you play small. Now, you may say, well, I did play small. I bought a small position. But nonetheless, what gives you the belief that biotech is going to work now? And why did you sell Amgen thinking that obviously maybe healthcare is not?
I think sometimes when you look at your portfolio and when you're trading and we're thinking about risk management, you afford yourself the flexibility to take the shot on something. And I've been one who for several weeks has been talking about stay high up in equity size class. Go high up, mid caps and large caps. Jimmy, I know you like small caps. Well, owning the XBI is a very pure way to get exposure to small caps themselves. If you think about what's happened with healthcare since the election, healthcare, the XLV is down since the election. The IBB, which is a biotech ETF that focuses on mid and large cap, that's down, but yet the XBI is higher. So I looked at what I had. I know that in the ETF, we only have a 4.8% weighting to healthcare. That's well below the 12% weighting for the S&P healthcare. So I'm underexposed there. I've done okay with Amgen, not great. Done okay. It's large cap biotech more than anything else. We had the news yesterday with Maritide. I still think Amgen's going to be fine in the long run, but I wanted to give myself the shot to get a little bit of the exposure to small caps in an area of the market that I know my portfolio certainly is underallocated towards.
Jimmy, you got AbbVie, UNH, and Vertex.
Yeah. And, I said this earlier, that I do think, you mentioned, Scott, that healthcare has underperformed. That's factually correct. I do think that's a place you can look. I understand that if I say to you, as I am right now, that lighter regulatory touch should help healthcare. Sorry, Scott's making fun of me. Go figure. That a lighter regulatory touch should help healthcare. I realize we're not going to abolish the FDA, but still, the sentiment matters. If you're in a lighter regulatory administration, people are going to look at one of the most overregulated industries like healthcare and say, hey, maybe that's where I should put some money.
All right, let's cap the conversation before we take a break with a move. Another move. This one from Jim Lebenthal, and it has nothing to do with healthcare. Lockheed Martin. So you trimmed Microsoft, as we said at the very top, so let's round it out with what you did with the money. You bought more Lockheed. Why?
A couple of reasons. One, I want to be more in industrials. As I mentioned at the beginning, and as we all know, industrials along with financials are really on fire right now. And unfortunately, it makes me wince, but we are still going to be in a hot war environment for quite some time. The missiles and planes that Lockheed Martin makes are going to be in high demand.
All right, we'll take a quick break. Coming up, we do have 4 bullish calls on 4 committee stocks. Calls of the day next. All right, welcome back. Let's do some analyst calls on holding today, upgraded following its earnings. It's up 100% year to date. New record high today, 4th positive session out of the last 5. Jimmy owns that stock. What do you think?
Boy, it's been fun. It's been fun. I hope others watching own it as well. Projected earnings per share growth is above 30% in the coming 12 months. I think when you look at that and you compare it to a multiple that's in the high 40s, I think that's fair. I think the estimates are likely to go higher after earnings. There's a lot of expansionary things going on here, whether it's expanding into apparel from shoes, whether it's going to hiking shoes as well as running shoes, whether it's new geographies. There's a lot going on fundamentally to like here. And again, for the second time, I'm going to reference Joe. The momentum's terrific.
The price targets got bumped. BTIG 64, Telsey 62, Williams at 60. Let's just throw that up again. Just to remind our viewers where it's currently trading now as we go through. So you're at 54 and change, but that chart is really straight up and to the right. As we said, it's a double.
You know, but it comes down. Look at that. You're looking at it right now. There was a moment just about a month and a half ago where it came down. Great buying opportunity. It'll probably happen again if it sees it. If you see that, folks, you can get right in.
All right. Walmart, speaking of Telsey, they call it their top pick of the holiday season, Shan. Outperformed $92, $91 at Deutsche, and $90 at Gordon Haskett. What do you think about the stock?
Yeah, so we've seen this consolidation, right, in terms of the combination of value and convenience for shoppers. You've seen a lot of the fixed price stores really under a lot of pressure over the last few months, and that consolidation by both Walmart and Costco of these buyers up and down the income chain, you're seeing that continued strength. And so, I think that there's really starting to be a bifurcation here in terms of retail and those stores that can capture those consumers up and down the income spectrum. I think you're going to be in well position for 25.
Joe, you own the stock, right?
I do. It's the economy of scale, and clearly for Costco and Walmart, they're benefiting relative to Target. Let's keep in mind the holiday season is shorter by 1 week. You have Thanksgiving on the 28th. We all return to work on the following Monday. It's December already. So obviously brick and mortar retail is going to struggle in that environment. I think the winners are going to continue to be Amazon, Costco, and Walmart.
What about Block? Outperform at Bernstein today. Should gain under the new administration, they think. What do you think? Because of the pro-crypto stance and deregulation. Do you agree with that?
I mean, that's what it is. It got added to the ETF on October 31st. It was added purely for momentum. Now it's benefiting from the crypto environment. The revenue growth is not really there. I mean, you're talking about a company that was growing at 20% just 12 to 18 months ago, now single digits. So I can't make a strong fundamental argument. I'll call it exactly what it is. It's momentum at its purest related to the crypto.
All right. Netflix reiterated by Jeffries, a new record high today. Joe, you own it personally and in the ETF.
And staying with it in both of those positions. Why? Because we could talk about, put the technicals to the side. How about the fundamentals? Friday night, you have Mike Tyson versus Jake Paul. Let's go Mike Tyson for all our older guys. And then on Christmas Day, can you come up with better games than Chiefs, Steelers, Ravens, Texans? 282 million subscribers. Turn the calendar into January. Here comes WWE once a week. You know at some point UFC is going to get involved in this. So live sports is the future for Netflix. And after what they went through with passwords and ad tier, it's just another strong fundamental catalyst.
All right, let's get the headlines now from. All right, welcome back. Just want to note we are green across the board now. S&P getting back to 6,000. Dow's above 44,000 still. 177 is the gain today. We're looking at Spotify today because it missed on its earnings and rev. It did top its profit forecast. It's a new record high today. Joe, you own it. It was reiterated today overweight and a top pick over at Morgan Stanley.
So it will continue to be in the ETF until the end of January. At that point, we will analyze it. I'll say this, okay, the stock is rich in terms of its valuation. The earnings report, subscriber growth was good, profit margin was good. They did miss. It wasn't a spectacular report. I think what's happened here is that the analyst community is finally coming down to prior performance and acknowledging prior performance after this report, and now raising their price targets. You have 29 buys, 9 holds, and 1 sell, 465 price target. So they've increased that. What does that all mean for the viewers? I don't think you chase it here.
Okay. There it is, up 11% today. MasterCard, let's take a look at those shares today. They gave their prelim forecast for 25 to 27. Bernstein prefers Visa over that. Jimmy, you own Visa, Joe owns MasterCard. Maybe we can have a little bit of debate. Hand gestures, whatever you need to do to make your point, please have at it. Last time it was, you're very forceful in the way you spoke about it.
Emphasize things.
So you want to do that again with Visa? So
yeah,
why?
but I'm not sure what hand signals to use here, because they really
You can use one to give to me if you'd like off camera,
They really look,
whatever you want to do.
they really look like they're the same to me. I mean, the same motive forces should move both names. An expanding economy increases spending. Higher employment increases the willingness of banks to issue credit. There will be times when one underperforms the other, but I think they really should move in lockstep. I happen to like Visa just because it's the bigger of the two, but I'm not taking shots. I can't take shots, Scott. I can't take shots at MasterCard.
You can't take shots.
Go ahead.
Okay, what you can do, though, is you could look at the factors. And the factor, when you look at your favorite factor, which is momentum, Jimmy loves momentum now. Okay, momentum
with you.
Momentum guides you towards MasterCard because you've seen outperformance over the last year. Then when you look on the other side of that and say, okay, fundamentally, what is this company delivering? The revenue growth is much better at MasterCard than it is Visa. You're looking at me.
We don't. No. Listen, honest conversation here.
You want me to give you the numbers?
No, but Visa, momentum here is pretty phenomenal.
But it is. Momentum's phenomenal, but the momentum in MasterCard is actually better than Visa. And the revenue growth, I like 20% revenue growth. Is Visa giving me 20% revenue growth? No.
This Visa chart is dazzling. Okay,
it's dazzling. No, it looks good. And we've owned it's been in the ETF in the past. I always say it's the ETF. The ETF has owned it in the past. But the revenue growth is not what you're getting at MasterCard.
Fine.
All right. There's no I in team. There is a me.
There's a Joe and Joe T, though.
There is a me.
There's a Joe and Joe T. Okay.
Okay. The home builders. Maybe this because of the edge being taken off of yields on CPI, because they haven't traded well lately on, rates going up, mortgage rates going up. What do we think of this group here? Is it just too tricky because it's going to be pulled by where rates go, or what do you think?
The housing sector needs more inventory and lower rates, and those two things are really difficult in a bit of a chicken and egg scenario. Joe's talked about this frequently. The incentives that are being required right now for home builders to sell their properties in lieu of lower rates it's really challenging. And so I believe this could be a clear catalyst for the U.S. economy in 2025, but we just need to see mortgage rates settle out to it in order to create some capitulation for home buyers that this is really as low as they're going to go, and then they get a better handle on what that affordability looks like.
All right. Copper, lowest level since September the 11th. It's down 8.5% since the election. Why do we think that is?
China. China is coming into this scenario with a potential trade war. We can talk about whether the bark is worse than the bite in terms of the size of the tariffs that are going to be put on by the Trump administration. But the bottom line is that China's coming into this scenario much weaker than they were in 2017. And so there's real concerns about the potential for continued slow economy in China.
All right. Quick break. And Santoli, he's next. Mike is with his midday word. Our senior markets commentator, Mike Santoli, here at the desk for his midday word. How are you? Yep. Drop some knowledge on us. What's on your mind today as we sort of take stock of where we've been over the last week?
Yeah, look, market's very firm. It's sort of consolidating in an incredibly painless way this week. You've got mostly sideways. It's still rotational. For as much as it seems like everyone is kind of bought with both hands. Last week, Schwab's daily average trades were up 12% from the prior week. I mean, people got involved, but it's rotational. What I mean by that is it's all going toward the stuff that people think is going to benefit. It's cyclicals, it's financials, it's industrials, and things are backing off in the face of that. Semis, they, in another context, would be a big problem for this market. They've really surrendered to leadership. They're for sale every day. But guess what? Software's up 4.5% this week.
Yeah.
Semis are down 5.5%. So that flow is keeping us in place right here. We talked earlier about how the CPI number could have been seized upon as an excuse for a market to back off or for yields to get a little bit out of hand. Obviously didn't have enough there. The number was in the zone enough that we're passing it by. So we'll see. It's hard to fight the flows. That's where we are right now, and it's a don't overthink it moment for, again, expensive, but it shows you that coming into the election, this was not a hated, under-owned market. There was room to re-risk. There's room for yields to go up safely, room for the dollar to rally without causing too much problem. But you wonder how much more from here.
Well, room for the Fed to cut in December because of today's print. That's a big deal.
Yes. So you can dial it ahead 6 weeks and say, we think we know what we're getting. After that, we'll figure out if it gets harder.
All right. I'll see you in a bit. It's Mike Santoli.